It is exactly 8 minutes after 4 p.m. Central African time as we turn our sights to Zimbabwe, where the Reserve Bank of Zimbabwe has stated that reserves backing the Zimbabwe dollar currency have increased by nearly 9% to $980 million. The RBZ, which is the Reserve Bank of Zimbabwe's Director of Economic Research, Modeling and Policy, Nebson Mupunga, says the central bank is well on its way to meeting some of the conditions necessary for a monocurrency regime, as dictated in Statutory Instrument 218 of 2023. Mupunga says the Reserve Bank hopes to hit the $1 billion mark in terms of reserves by the end of this year. For more on this, we joined on the line by Persistence Gwanyanya, Monetary Policy Committee member of the Reserve Bank of Zimbabwe and founder and CEO of Bullion Group. A very good afternoon to you, so good to have you with us. Welcome.
Thank you for having me.
So what is your take on the reserves backing the Zimbabwe gold? Was this quite expected, or is this pretty much a bit of a surprise even for the Reserve Bank?
Given the background, the journey we have traveled with currencies, the domestic currencies, it's necessary that our currency be backed, and current backing of our currency in the form of foreign currency reserves, including reserves of precious minerals, has given us some measure of, or has given the currency some measure of convertibility and therefore confidence in the currency. But we have always wanted to see the increase in reserves beyond what is required in a multiple currency regime, in readiness of the monocurrency regime. The reserves at the current level of $980 million provide more than 4 times cover on the reserve money, our local currency reserve money, our ZiG reserve money. And ideally, the acceptable level of cover is a full cover of the reserve money. But we have managed to exceed that 3 times, at more than 4 times, more than 3 times. But beyond that, we have always wanted to build reserves to cover the import cover, or to provide for the import cover of 3 to 6 months needed for a country in a monocurrency regime. We are not yet in a monocurrency regime, but we want those reserves to continue increase to the levels that are needed for a currency in a monocurrency
and
regime.
I'd like us, Mr. Gwanyanya, to talk about this first and foremost. You're speaking about a monocurrency regime. The deadline that has been set by government is that of 2030. What is it going to take in order for Zimbabwe to just have the ZiG as its currency? What needs to be in place to take effect?
So we need the conditions for the monocurrency to be satisfied, and one of the conditions is that of the reserves we are talking about. We need to 6 times cover. So at 1 billion, reserves currently provide for 1 and 1.2 times cover. And for 6 months cover, that is the maximum we need. We need reserves of between 5 and 6 billion US dollars. But at the pace we are moving, I am quite confident we are able to get to those levels. So it's one of the conditions. But the most important condition which all these other conditions are coming to support, is stability. We need stability, macroeconomic stability, price and exchange rate stability. If we get to a point of durable stability, meaning beyond 1 year, you need stability to be able to engender some level of trust in the currency. So it is the stability which is necessary to restore trust in the currency. It is stability which will deal with all other issues that the market is concerned about, the monocurrency regime.
I'd like us to look at the increase of the reserves. What could that be attributed to? Does the increase in the gold price have anything to do with that? And what are the risks associated to this?
Yes, it is attributed to a number of factors, but most importantly for me is the conscious decision by the government to start building reserves from obviously the gold and other precious minerals, but also from foreign currency. I think our reserves, the last I checked, in terms of gold, it exceeded or around 3.5 tons of gold. But obviously that aspect of reserves is affected by the performance of the gold prices, which are currently on the rally. And yes, we also benefited from the increase in the gold prices. But we have also continued to see increase in the cash or in the foreign currency and also other precious minerals that are making up the reserves. And with the rate at which we are accumulating these reserves, it's quite encouraging. Our exports are increasing, and this is the source of the money that we use to accumulate the reserves, because we have got a surrender system where the exporters would have to surrender a certain level of export proceeds for us to they surrender that we buy that at using our local currency, and we use part of the money to accumulate the reserves. And the rate at which we have been accumulating the reserves is so far encouraging. But beyond the reserves, we need the confidence in the currency. But you cannot detach confidence from the broader performance of the economy. Our economy has been performing to expectations, and in some cases actually exceeding expectations, given the increased incidences of external factors.
Mr. Persistence Gwanyanya, unfortunately, we're going to have to leave it at that for this afternoon. But thank you so much for this update regarding the increase in the reserves for the ZiG. Certainly Zimbabwe looking on the up and up. And then Mr. Gwanyanya, Mr. Persistence Gwanyanya, Monetary Policy Committee member of the Reserve Bank of Zimbabwe and founder and CEO of Bullion Group. Thank you, sir.